And there are two possibilities here. What if Bitcoin goes up and what if Bitcoin goes down? And that's where it plays with volatility. The best case scenario for JP Morgan is that Bitcoin's price goes way up. Why? Because of the significant profits they will make from all those call options they've been acquiring as the time progressed. And I forgot to mention, if Bitcoin drops this next year, calls will be dirt cheap because the market will think it won't recover in the future. So it'll buy very cheap calls, right? And in the long term, by 2028, if Bitcoin is worth what they believe it is, which is around $250,000, they're going to sell the calls, making an exorbitant profit, and they'll be able to return the money, the bond, and keep a fortune for themselves, right? So JP, that's what Morgan does. He's betting it'll go down next year, then have a huge rally up. The higher Bitcoin goes in 20, the more money JP will make. Morgan. Hello everyone, I'm Bitcoin Libertarian. So, we're going to get into something that happened this week, and that's causing a bit of confusion due to how certain influencers have handled it. So, the news that JP Morgan is going to be creating structured debt with Bitcoin, that's basically it. And it offers massive returns if Bitcoin, the price of Bitcoin goes through the roof in 2028. Okay. So what JP Morgan did was send the SEC a bond, the prospectus for a bond for them to approve, where that bond will raise money and it will be tied to the returns. They will be tied. Oh, sorry. I beat Bitcoin ETF's quote from BlackRock, right? Many influencers have said JP Morgan is going to buy Bitcoin. Many have said that with this money, they're going to buy IBIT. No, gentlemen, JP Morgan is not going to buy Bitcoin. JP Morgan will explain what the bond is a little later, but and many are saying this is bullish for Bitcoin because there will be pressure on Bitcoin. Is JP Morgan already accepting Bitcoin? No, folks, let's explain it. But first of all, okay, I'd like to explain a couple of small things before we get to the actual explanation of this bond and see what its implications are. First of all, I want to explain this graph that many of you have already seen, which is what shows global wealth. Okay? This is the global wealth that exists in the world, which is about 900 trillion. To give you an idea of that magnitude, 900 trillion, Elon Musk, the richest man in the world, has a net worth of about 500 billion, which is half a trillion. So Elon Musk doesn't even come close to representing a tiny fraction of this global wealth. And how exactly is all of this enormous global wealth distributed? It's very simple. There are $330 trillion in real estate in actual properties, 300 trillion in bonds. And we're going to talk about this very shortly. 120 trillion in money, in liquid money, right? In money, in cash, in fiat currency. 115 trillion in equities, that is to say in the stock markets across the globe, then 23 trillion in gold and 18 trillion in art. This is just absolutely marvelous. 6 trillion in collectibles. What are collectibles? You say collectible cards, the cards that North Americans use. You know how much they love those baseball cards and all those kinds of things. Or action figures. Those are considered collectibles. The entire market for collectibles, it's actually significantly larger than Bitcoin. The total market capitalization of collectibles is larger than Bitcoin's. And Bitcoin, it's currently sitting way up here with a $2.3 trillion within the grand circles of global wealth. So, having seen all of this, what I'm trying to convey here is this. If you truly understand Saylor, you're most likely following Michael Saylor. Michael Saylor, what he did was say, well, we began to accumulate Bitcoin through issuing shares, through selling our own shares at an M&A. When the stock has an M&A greater than 1, a very high M&A, I sell my shares in the market to purchase Bitcoin. This report, say, see, you're seeing, they accumulated Bitcoin, and this year they started releasing many fixed income instruments, meaning they offer a fixed annual percentage, not dependent on the stock price, because Michael Saylor's goal is to target this $300 trillion pie, which is the bond market. And why is that? That's what's called the fixed income market, right? So these are debt bonds, mainly from countries, from companies. And those bonds, what money is invested in them? Generally, it's pension funds. Pension funds invest in these bonds, because it's quote unquote safe money. The US Treasury bond is safe money. The United States won't default on its debt. But what happens? These bonds offer a return of 4 or 5% annually, when we see that the real inflation in the United States is more than 10%. So you're putting money there and you're losing money at the end of the day. Why? Because it's paying you 4% when US inflation is 3% plus an average 8% from money debasement. Money is losing value at a rate of 11 or 12% annually. So what Saylor said is, if I have an asset like Bitcoin that has an average annual return of around 40%, and ultimately within 50 or 30 years, it will have an annual return of between 15 and 20%, if I give investors a higher rate than a bond provides, I'll attract that money and I'll buy Bitcoin, making a spectacular profit. Okay? So that's Michael Saylor's plan, to attack this market, which is the debt market, or, the market of fixed income instruments, bonds, those that pay you a fixed annual interest, regardless of what happens in the market. What's the deal? That's what we're aiming for. Imagine, and here's the potential of Bitcoin. Imagine Bitcoin taking just a small piece of this bond market. Just a small piece. I'm not talking about the 300 trillion. What if it takes 10%, right? That is 30 trillion. Just imagine how high it could go. It surpasses the market cap of gold and reaches exorbitant prices. So this really comes down to two things. The first one is for all those who say we've arrived late. We are not late. We are extremely early. And second, to see the potential and to understand Saylor's game in the treasuries, which many say is a Ponzi scheme because the price has dropped now and so on. Basically, what he's aiming for is to grab money from that mountain of cash that exists in treasury bonds and also from private companies, right? Well, with the explanation now given, this bond market, this money is proving to be extremely attractive. The other market participants have now realized this, and they don't want to let the opportunity slip away as it did with Bitcoin. JP Morgan, Wall Street, BlackRock, they truly let Bitcoin get away from them. And now they've come back a bit late to the game, especially BlackRock and all the money from Wall Street, because they know that Bitcoin is here to stay. Bitcoin is an asset that is truly here to stay. Therefore, that's why CTFs exist and why all these financial instruments are being created with Bitcoin. And that's why they saw how Saylor was operating and said, all right, we're going to fight for that money now. Take it from Saylor and bring it over to us. So now I'm going to explain two concepts that will be important for understanding what comes next. The concept of a call and the concept of a put. If you understand it, they are concepts. I'm gonna bring them down to earth. A call is a contract that allows that you sign today, and it lets you access an asset in the future at a predetermined fixed price. Do Argentinians remember the whole future dollar case involving Cristina, Boudou, and all those corrupt politicians? Well, what you do with a call contract is essentially to say, okay, in the year 2027, I'm going to buy you a specific asset. It could be shares or perhaps IV shares or even units of IV from BlackRock's Bitcoin ETF at a specific price, right? if that stock goes really, really high, what you're going to do is buy it at a lower price. Let's put it this way, for example. Suppose that today the IV unit is at 100, and I say, well, I assume that for me, Bitcoin is going to go up. So I'm buying a call option for the year 2027, not at 100, let's say, at 150. What does that actually mean? It means that if Bitcoin goes above 150, I will have I'll be able to purchase it. Sorry, if it goes above 150, say to 170, I can buy it at 150 and profit from the difference, right? Now, if in 2027 it's at 130, I lose the money I put in today, which is in a way a bet. So basically, it's like this. I'm betting some money today that the value will be at a certain price, right? If it's above that certain price, then I'll win. If it's below, then I'll lose. That's simple. On the other hand, there are the puts. Puts operate in a completely opposite manner. It's essentially betting that prices will go down. So I'm saying I'll be able to sell. Let's say I have today for puts. I need to own the underlying asset today. I have today, IBIT. I have IBIT shares. And I'm saying that for me, Bitcoin is going to drop. It's going into a bear market. So I say, well, by the year 2027, I am planning to sell puts to sell IBIT at 100. Then, if the market price is below 100, I will sell my shares or my participations at 100, even though in reality they are worth 70. So I make a profit. On the contrary, if it's above that price, I simply won't sell it. So then, if this point is now clear, let's take a look at what JP Morgan is proposing. JP Morgan is issuing a bond, right, which I believe will start selling in December, and I think it's aiming to raise $1 billion. That's not a lot of money for JP Morgan. And what that bond does is it ties its performance to the performance of IBIT. For example, it has two phases. The first phase is in 1 year. In a year, if IBIT, the price of IBIT is the same or more, if it's more than it is today, your bond is cancelled and you get your capital back plus 16%. Imagine today, Bitcoin is at 90,000 and it's the same as the price of EBIT because it's pegged 1-to-1. Today, Bitcoin is at 90,000, right? Today, you're putting $1,000 into the JP bond. Morgan, next year, if Bitcoin hits 100,000, JP Morgan says, we'll close the bond, we'll pay you 100,000, we'll pay you the 1,000 plus 10%, 16%, which is 160. So you take $1,160 home. Saylor or sa ba? Este pala ba? Ana, suppose Bitcoin is at 90 now, and next year it's at 80 in December. What JP Morgan says is, well, this continues. Keep going, keep going, keep going, keep going until when? Until 2028, which is when that bond ends. And in 2028, what JP tells you... Morgan is saying, I'm going to pay you back for this. I'm sorry, my apologies. If the actual share stock, if Bitcoin, the current price of IBIT, I'm going to pay you the bond plus 50% of IBIT's yield. Okay, so I'll pay you the bond. I'll pay you 16% interest plus an extra. That will be 50% more than what IBIT yielded. So if IBIT performed, let's say you made 20 pesos. It increased by 20 pesos per share of IBIT, right? JP Morgan will give you 30 extra pesos. I don't know if that makes sense. So if IBIT goes up by 20%, JP Morgan is going to give you an additional 30% on top of the 16% that is your standard fixed amount. Is that understood? Now, that triggers a buffer. That has a buffer. What happens if the price of Bitcoin goes down? If it drops by up to 30%, JP Morgan returns your initial investment. It returns the the 1,000. Today, you put in 1,000. Suppose Bitcoin today is at 90, and in 2028, it's at 80. You get back the 1,000 that you invested. You didn't win or lose. Now, if it's below 30%, let's say today it's at 90, and Bitcoin by 2028 is at 45,000, meaning it drops by 50%, then what you're going to receive is 50% of what you originally invested. So you're going to lose. Okay, so what's going to happen then? You're going to receive 50%. If you put in 1,000, you'll receive 500. So basically, how is the bonus structured? The price of Bitcoin today, $90,000, right? 2026, if the price of Bitcoin is greater than 90,000, more than $90,000, the bond closes, they pay you the principal plus 16%, right? And that's it. Now, if the price is below $90,000, then just keep going until the year 2028. Is that clear? In 2028, if Bitcoin's price, they will return the 16% plus IBIT's performance if you had a positive return. For example, if Bitcoin is at 100,000, 120,000, 130,000, you're going to have a 50% higher return than IBIT. Now, if the drop is between 0 and 30% in the negative, it will return all your capital. Now, if the drop is more than 30%, it will return what remains. For example, if it dropped by 60% or if it dropped by 40%, it's going to return 60% to you. Got it? Basically that. What does JP do? Morgan with the money. JP Morgan doesn't buy bonds, doesn't buy IBIT, and doesn't buy Bitcoin. What it does is simply receive money that it will use for, I don't know, for operational expenses, to pay its employees, to maintain its buildings. But one portion of that money, what it's going to do is just gamble it away, gamble it using calls and using puts. So if Bitcoin's price goes up, what he's going to do is purchase call options to ensure long-dated calls, extending all the way to 2028 to guarantee that when the day comes for him to return that money along with the additional profits from the good performance, right? What he's doing is win. He's gonna win. He's gonna win because he's gonna win with that difference. Because suppose if today I buy a call to buy IBIT in 3 years at $100 and Bitcoin in 3 years is at 200, what it's going to do is it's going to gain 100% and it's going to give you, it's going to earn more than 100%. But it will give you a percentage of that profit, right? Now, if a Bitcoin goes down, what he'll do is buy puts so that tomorrow, if Bitcoin crashes, well, they'll have an extra gain by selling those puts and making extra money. Why is JP doing this? JP Morgan, what he's doing, in my opinion, is saying that the 4-year cycles will continue. In my view, what will happen in 2026 is Bitcoin will go down or move sideways, and then it will explode. That's what JP Morgan is stating. And what he's utilizing in this bond is taking advantage of also operating under the assumption that Bitcoin is volatile. And why is that? Because what are the potential scenarios that JP has considered? Morgan, from the worst case scenario to the best case scenario. JP's worst case scenario. Morgan's prediction is that Bitcoin will go way up next year. Now it's at 90,000. By December next year, it's above 150. If that happens, JP. Morgan will have to give back the money. All the money he has, he'll have to give it back. He'll have to return 16% interest. But also, since he was buying those calls, those financial instruments, and essentially gambling, he'll lose all the money he invested in those purchases. ultimately, I'm not sure if he'll lose whom, but he will lose initially the money he put in to buy those financial instruments to hedge himself. So if Bitcoin goes up a lot next year, he loses little. Right? He loses a small amount, he loses a million. But when you compare that to the scale of JP Morgan, it's practically nothing. It's a wager with very minimal risk involved. Now, what happens if in the coming year, Bitcoin sees a slight increase? He stands to gain just a little, right? He'll either make a profit or simply break even, right? For example, today it's 90. In December of next year, it's 105, 100, 110. He'll be untied from the bet. Now, what if Bitcoin drops next year? He won't have to return the money. It continues until 2028. And there are two possibilities here. What if Bitcoin goes up? And what if Bitcoin goes down? And that's where it plays with volatility. The best case scenario for JP Morgan is that Bitcoin's price goes way up. Why? Because of the significant profits they will make from all those call options they've been acquiring as the time progressed. Oh, and I forgot to mention, if Bitcoin drops this next year, calls will be dirt cheap because the market will think it won't recover in the future. So it'll buy very cheap calls, right? And in the long term, by 2028, if Bitcoin is worth what they believe it is, which is around $250,000, they're going to sell the calls, making an exorbitant profit, and they'll be able to return the money, the bond, and keep a fortune for themselves, right? So JP, that's what Morgan does. He's betting it'll go down next year, then have a huge rally up. The higher Bitcoin goes in the more money JP will make. If next year it goes down, it moves sideways, right? Now, what happens? Let's suppose Bitcoin, JP Morgan, who says Bitcoin is a scam, Bitcoin in 2028 falls even more. Well, what JP does is, Morgan, if it drops significantly, he gets to keep the client's money. He gets to keep half of what they have, 60%, 40% of what the clients initially put in, plus all those put options he was buying, which essentially allow him to sell Bitcoin at a price much higher than its actual value, right? So what's happening here is it's bullish for Bitcoin. I think it's actually quite irrelevant. I believe that for Bitcoin, many influencers are saying, no, this is super bullish because of the price. To invest in derivatives, because JP Morgan won't directly buy Bitcoin or directly EB. JP Morgan will buy derivatives. They'll buy, they'll gamble. So what's going to happen is, I don't know if that will affect Bitcoin's price too much or IBIT's price too much. But what's happening here, and what we are clearly witnessing, is that Bitcoin has now entered Wall Street's radar. It's here, and it's definitely here to stay, therefore. And what the comprehensive analysis that JP Morgan is currently conducting. Morgan, it will probably go down next year, but in the long term, Bitcoin is going to absolutely skyrocket. Because I'll repeat myself, this bet for JP Morgan, when is the most valuable scenario? For Bitcoin to drop next year, but then by 2028, it's at $1 million. The higher Bitcoin is in 2028, and the lower it is next year, the better it will be for JP Morgan. That is what they are envisioning. Therefore, Valerie Perot partner investor are bullish for the price of Bitcoin in the short term and in the long term. No, why? Because none of the instruments that are in play go directly to Bitcoin. It's not like JP Morgan is saying, we are raising capital to acquire IBIT. No, they are going to purchase IBIT derivatives to hedge their position as the market evolves. Now, what is the correct interpretation we should make of this? The point is, JP Morgan states quite clearly, Bitcoin is indeed an asset. Bitcoin is here, it's present. Bitcoin is not just some fleeting thing. It's certainly not a scam. It's not just magic internet money. It's a legitimate financial instrument that absolutely must be taken into serious consideration. Saad made And the other interpretation we should make is to say Saylor has truly sparked the interest of everyone. Isn't that right? What Saylor has done throughout this entire period has caused Wall Street to start viewing Bitcoin with serious consideration. So basically, this is what's happening. The JP Morgan bond that they're putting out, what it's betting on is A, that Bitcoin will drop next year and then rise exponentially, right? Because the higher Bitcoin goes, the better the return will be for JP Morgan. So what they're really betting on is volatility. Do I agree or do I not agree with this? Let's take a moment to see what the Power Law says. I forgot to pull it up, but let's see what the Power Law says to determine if Jamie Dimon can make money, can achieve good returns, or if he cannot achieve good returns. But essentially, that's what needs to be understood. Many influencers are framing it as this is bullish because JP Morgan. No, it's not really what you call bullish, nor is it bearish. But what it clearly demonstrates is that the bank JP Morgan already has Bitcoin on its radar, right? So here we have the Power Law. Let's take a look at what Jamie Dimon has to say and what the Power Law predicts could happen to JP Morgan. Let's see, just a moment here. No, sorry. I want to take this out. Well, so the Power Law, it's current law. Now, we find ourselves at the price as of today, really ought to be. My apologies. I meant 24. So based on this, let's just say the price should be situated somewhere around 116,000. The price today is around, it's at 91,000, 91,000. What could happen by December of next year? Per the Power Law. November 25th. There it is. What the Power Law state is that Bitcoin's most probable value, yes, should be $165,000. If this happens, yes, Jamie Dimon is done for. JP Morgan is done for. He'll lose a bit, but the bet won't pay off. But it's also possible the Bitcoin is at 75,000, right? By December of 2026. So if it's valued at 75,000, then that would be perfectly fine because the bond wouldn't be renewed. It wouldn't pay anyone. And we would continue on until 2028. That in December of 2028, let's consider December 23rd, 2028. Based on the Power Law, Bitcoin would have to be $300,000. Then a business opportunity for JP Morgan's perspective is that Bitcoin will remain trading sideways, leading people, the market in general, to start losing confidence in Bitcoin, so they can then buy these very cheap call options to acquire Bitcoin, or IBT, which ultimately is the ETF that's pegged one-to-one with Bitcoin to buy IBIT very cheaply in 2028. And in 2028, Bitcoin doesn't go to 300,000, but to 500,000, which is a probable value, or to a much more extreme $1,200,000. That it would be a highly improbable value, but it can happen for the Power Law. All right, because synthesis, we're going to stop sharing the screen now. So let's get back to basics here. I've just explained it to you. I hope that you all understood. Perhaps I might have confused you a little bit, but that's the main idea. Hey, JP Morgan is not buying Bitcoin. It's not going to purchase ETFs. What it's actually doing is issuing debt to raise capital, and that debt is tied to the performance of the ETF, which ultimately tracks Bitcoin's performance. JP Morgan's analysis, and this is the most important thing, is that next year, Bitcoin's price will go down or move sideways, and then it will go up as our president says, like a diver's fart. That's the interpretation from JP Morgan. Can this affect the price of Bitcoin? No, because they're going to be trading derivatives of the IBIT. They're not going to operate IBIT per se. But let me reiterate once more. What this truly shows us is that Bitcoin is already at the same level as everything else. It's already on the radar of the big money players from Wall Street, and everyone is pointing to that little square, which I'm going to share with you all again. This little square of $300 trillion, which constitutes the bond market, the entire fixed income market, if Bitcoin were to capture just 10% of that, imagine this. Let's do the calculations. We'll use the rule of three, right? If it's at 90 today, in 2 trillion, in 30 trillion, what would it be? What would it be? What would it be? It'd be 10, it'd be 900. By 15, it'd be over 1 million. So that's what I'm showing you, the potential of Bitcoin. And the moral of all this is one thing. First of all, can Mrs. Rosa buy this bond? No. This bond is available only for large investors who have at least $1 million or more in liquid funds to invest. So Mrs. Rosa simply cannot buy this bond. You all are not able to buy this bond. I am not able to buy this bond. And even if I could, I would not buy it. Doña Rosa, what can she possibly do? She can simply buy Bitcoin. What can you all do? You can buy Bitcoin. $20, $30, or just $10. As I always say, DCA. Every fine, every week, every 2 weeks, every month, a fixed amount, right? That won't change your life in the medium term, okay? Obviously, this is not financial advice. I'm not telling you to go buy Bitcoin, but what I'm saying is what can be done. JP Morgan, the JP Morgan bond, no matter how much they might want to purchase it, they simply cannot acquire it. Bitcoin, if you wish, you can go and buy it right now because it's Sunday and financial markets are not operating. But anyway, I hope that this has become clear to you. I don't think I was very clear, but deep down, you will certainly understand it. I'm going to repeat the same thing, the thesis of this. JP Morgan isn't directly buying Bitcoin, nor will it purchase ETFs, at least not in the short term. What it will do is operate on derivatives of the ETFs and will offer a return related to the ETF's performance, obviously, which is Bitcoin's performance. And JP Morgan predicts that next year is going to go down and that afterward it will shoot up like a diver's fund. I personally don't believe that's the case. Me, personally, but, well, I don't know more than JP Morgan. I believe that the JP Morgan analysts, my cousin is there, and someday we'll bring him on the podcast to talk, even though he's not in this field. But I don't think so. I believe that Bitcoin next year, the theory of cycles is completely finished. I think. No, this isn't a prediction. I'm not making any guarantees here. I believe that next year it could potentially move upwards or perhaps continue its sideways movement. I don't foresee a bear market. I don't anticipate anything as extreme as what we've seen before. And if it does come, well, then we'll just be able to acquire even more Bitcoin. But anyway, that's essentially my conclusion on the matter. So I truly hope that you all enjoyed this. If you have any questions, please leave them in the comments below. If there's a specific topic you'd like me to cover next week, let me know in the comments. And well, if you enjoyed this, give us a like, subscribe to our social media, subscribe to the channel, leave your comments, and share the episode. I want to thank Diego Soju again for his Satoshis and all the people who might send me Satoshis and don't tell me. But guys, listen, please save it for yourselves. Please don't send me money. If you have money, go buy Bitcoin. This is not financial advice. But if you have money, use it for yourselves. Don't send it to me. I want you to show your support by giving a like, subscribing, commenting, and sharing it with your friends. That way, Mr. Google gives me the money, not you. So guys, we'll see you all in the next episode. As I always say, please support us because you're helping us in this monumental task of painting the world orange. Share the episode with the people you love. Share the episode with the people you hate because we have to give the orange pill to 8 billion people. We'll see you again next Monday with another episode of our podcast. Stay humble, stack sats, and always remember, we are all Satoshi.
And that's all for today. If you like the episode, please give us a like, subscribe to our channel, follow us on social media. Our X account is the Bitcoin _. Our YouTube channel is the Libertarian BTC. Our YouTube channel in Spanish is Libertarian BTC ESP. Our Patreon, the Bitcoin Libertarian. Our Instagram, the Bitcoin Libertarian. That's all. You can go there and follow us in all our social media.